Hello everyone, and welcome to this FinSmart's webinar. Beyond Referrals. So, building a sales and marketing engine for model accounting firm. And today we have two very expert panelists, and so welcome Gaynor, welcome Matthew.
Well, thank you.
Yeah,
Hello,
and
everybody.
yeah,
It's
and
not
let me
nice to be
first
here.
introduce them. Yeah, so. To introduce Gaynor Hardy. So Gaynor isn't just a marketeer, okay? So uh, she's a storyteller for accounting firms with a background that blends business strategies, transformational coaching, and B2B marketing. She has helped numerous firms go from invisible to in demand. She's also the author of the influential titles like Avoiding Apathy, right? And the Market Ownership Method, which tackle real challenges firms face when trying to stand out and attract clients beyond referrals. And that's good. That's one of the topic today. And Gaynor has coached hundreds of firm owners on building a brand identity, crafting messaging that resonates, and automating lead generation, turning followers into a loyal clients. Her track record of helping firms scale with clarity and confidence makes her insights especially valuable in today's noisy marketplace. So, welcome to this panel discussion, Gaynor, and we are thrilled to have you here.
Oh, thank you. I'm thrilled to be here, and I'm
Yeah,
thrilled to be with both you and Matthew because I know Matthew's he's reached to the pinnacle of growing his firm and now is helping other firms in different ways.
yeah. And to introduce Matthew, Matthew um, is already known. Let me tell you, he's a social media champion, first of all. We see all the time on the social media. So Matthew is a co-founder of Equity Accounting, which is now merged into Soren, right? And Soren is started with amalgamating, I think, 13 firms and in the top 100
Mhm.
from day one, right?
Yeah, it's 19 now, and we're top 40, I think.
Yeah,
So it's crazy.
okay, great. Yeah. So his firm Acuity is a modern cash focused accounting firms in the industry. Under his leadership, Acuity has grown not through luck but by design, with structured pricing models, efficient delivery systems, and a sharp focus on a scalable growth. Matthew is also known for his tech forward mindset and systems first approach. Matthew has pioneered processes that allow the firms to scale while maintaining consistency, quality, and the client satisfaction. His hands-on experience in building infrastructure around marketing, advisory, operations gives him a rare 360-degree view, ideal for any firm aiming to evolve beyond referrals into a sustainable long-term growth engine. So, welcome Matthew to this panel, and maybe your first reactions on this subject.
No, super excited to be here. I think we all like as accountants kind of and I started when my career kind of deal with building our firms based on relationships or maybe referrals or slash word of mouth. But I think what Gaynor and I bring is like a different perspective to make sure that you're not just worried about inbound, well, not just worried about referrals, but also think about inbound, your brand, like your targets, and being intentional about what clients you want to attract, both through inbound. In our case, we also do outbound outreach to customers. So just hopefully you can get a glimpse in some of the other things that can complement your existing strategies. So.
Yeah. And let me tell you, so at FinSmart, we have been talking to hundreds of the firms, and the most critical question that comes is that, okay, scale is fine, and they are scaling also. Sometimes what happens is that once they scale to a certain level, and and that's the time when they found that, okay, referrals are just not enough. I mean, what is those marketing stuff that they can do to go beyond the referrals and start again, to scaling up, right? Because, when you are an individual firm owner and, you are like about five, seven, eight people, it's fine because, you keep receiving, when you do good work, you receive referrals. But when you want to really scale high, then what are the strategies you
Mhm.
deploy, and that's prompted us to have kind of this webinar. So
Mhm.
Yeah, we hit that plateau right around the $3 million mark. So we
yeah,
plateaued and
yeah.
we knew that we are
Hmm,
going to have to do with two kind of rainmakers, more
hmm,
traditionally, that we were
hmm,
going to have to do something different kind of at that
hmm,
3 million, which was my third year in my partnership with Kenji back in, oh, this is probably 2015,
hmm,
2016. Because when I
hmm,
started 13 years ago, it was about $1 million practice with 10 people.
hmm,
So that's when we knew we had to do something different.
hmm,
So
hmm. Yeah.
When I always
So,
say, I mean,
hmm,
oh,
hmm.
go ahead. I was
Yeah, yeah,
going
go
to
ahead,
just
you know.
mention that with firms that, they reach that point where they, finally sort of get out of just accepting like whatever like clients they need to like set the foundation at a certain level, whether it's $1 million or $3 million. By that time, you probably have some niches that you're developing just by attracting through referral because you get a medical practice, for example, and then they have friends in that same space and they'll refer you, or you have a bank that deals with certain types of businesses and they refer things. So you start to see these niches develop. So that to me is the first step is identifying which type of clients are like the best clients for you to serve, and then
Hmm,
going and finding out where those type of clients are finding their information about your services or complementary services that you can then funnel back even more referrals, but get to know like where your customers are so that you can go to them as opposed to just expecting them to always
hmm,
be brought to you.
hmm, hmm. Sure. So
yeah,
as
the bet
we, hmm,
the
yep,
best advice I got as I was growing in my career, and thinking about when I was not a natural business developer. I'm a technician. I'm a typical CPA accountant.
Hmm.
But when I was at Cherry Beckert, I got a business coach that the managing partner got for us, and when they were teaching us how to do business development and how to be targeted, a lot of people were like trying to get whatever and just what came in, and the coach said something really profound to me is like, you want to be targeted, and you want to be targeted on something you're interested in, because if you're
Hmm.
successful, that's who you're going to serve. So, because
Right.
at the time, like hospitals was like a really open, like greenfield in
hmm,
our market. And I was like, I could do hospitals. And he's like, do you want to do hospitals? And I was like, no, that sounds
Right.
like terrible. And at the time, I was doing the service too. So if I got it, I had to serve it. So I was like, he's like, well, what do you get excited about? And then I said, well, I love working with technology companies. Love working with SaaS companies. I love working in that space. So that was actually the genesis for me taking the brand, the Tech CPA, getting the Twitter handle, the Tech
Mhm.
CPA at the time. That's my LinkedIn. It's because like if I was successful, then that would be the kind of clients that I served. So
hmm,
that was to Gaynor's point. Like it's not just like the why behind it is like if you're successful, you're stuck with all these clients in that sector. So make sure you want to be there and you want to be a part of that community. That was a
hmm,
really a valuable lesson I learned early.
Yeah,
hmm,
I
hmm,
love that too because I
hmm,
always use myself as an example because I'm
hmm,
not an accountant, but
hmm,
I've worked in the accounting profession for almost
hmm,
25 years, and it's because
hmm,
I love accounting firms. I love that
hmm,
it's business to business for the
hmm,
most part, and I love helping entrepreneurial accountants grow their
hmm,
businesses because
hmm,
I would say that's the other piece of business development beyond referrals that people need to get their head around is
hmm,
that if you're the firm owner, you're
hmm,
not an accountant anymore. You're a business owner who has to be the rainmaker. And so it's up to you to drive those leads, and you can't just depend on those referrals coming in. You've got to say, this is my strategy for
hmm,
getting leads against what specific goals are. And I find
hmm,
that because accountants are, obviously numbers people, like that's super important is to know in your head what those numbers are. Like I have a firm that we're working with right now, and they have a specific market area that they have some capacity in, and they're like, we just need seven, of this type of client at this level of service, and then we will fill our capacity. So they're thinking about it very strategically and then
mm,
backing into how do we get those seven clients, as
mm,
opposed
mm,
to, well, we're just gonna like throw some marketing dollars out there and
mm.
hope for the best, which is not a strategy at all, right?
Yeah, and so as today's modern accounting firm, as it is growing in 2025, yeah. So what are the risks that you see in terms of being just a referral only firm?
Well, if you look at just what we just did with private equity, like if you're building, like if you're thinking about your firm as an asset,
Hmm,
like, and you would like to retire at any given time, like everything has to be sustainable.
hmm,
So if you've tied the brand to yourself, or if you're the relationship partner and you're only doing relationship sales, like when you
hmm,
go to sell your business or you go to partner with somebody else, like that becomes tied to you. And there's a mental weight to that.
hmm,
There's a financial aspect to that. There's a mental weight to that that people don't talk about as like a burden that business owners feel. So when
hmm.
we were decided that we didn't want any of the owners of our business to close sales. Like we didn't
Okay.
want them to do that.
Hmm,
So the two thought processes were, first of all, that's how you can scale past yourself and your own time.
hmm,
Hmm.
Second, that frees us up to work on the business. Third, that creates like equity value. That becomes a company and not an
hmm,
individual. Like you're selling a company now.
Hmm.
If you like,
hmm,
and all of us want to like stop working at some point. So at
hmm,
some point you have to make that transition. I would
hmm,
think if you want to monetize your firm value. So as you think of those components, like everything kind of weighted to doing it. And then you have all these roadblocks that you're going through with this decision making. For us, the roadblock was like nobody can close the business like I can close the business. And that
hmm,
ended up, actually, that ended up being false. What we realized is, like I said, I had a 75% close rate. My sales guy had a 25% close rate. Well, I was only counting the people that got to the very end. And the sales guy
Hmm.
was counting everybody from every conversation he had. And like I would
hmm,
just forget to follow up with people, but I wouldn't count that as a lost opportunity. So
hmm,
as you professionalize the organization and think about like sales as an organization, like I don't know why we keep thinking accountants should be the closers.
hmm,
Like
hmm,
that's not our highest and best use or our skill set or our professional training.
hmm,
Hmm.
I like so that was how we decided to move to a professionalized sales team where we have professional
hmm,
closers. We have people that are going to run the sales process in busy season and outside of busy season. It didn't matter. Their job was
hmm,
going to be to close all the time.
hmm, hmm.
Hmm.
And what is
Well,
the
I think
risk
that,
that you see, because when you see that, okay, your closure rate was like 75, sales team is 25, it's a very high risk to take in terms of you always feel scared. Okay, so if I go away from the sale, would that sale go down? And how do you kind of tackle that?
Well, we just the way we tackled this, we said, let's do both, right? So
Mhm.
for a period of time, we did both. And up until this last year, like we
Hmm,
only like, and then after a couple of years, we just like completely turned over the sales team. And then this year, we
hmm,
realized, oh, when we joined Soren, we were like, oh, there's a loss of
hmm,
opportunities if you don't do the relationship sales piece. So joining with
hmm,
Soren, I have all these tax partners and all these markets now
hmm,
that are kind of serving, like supplementing where we kind of went too far the other way, right?
hmm,
Like because we got out of it completely, so we didn't have
hmm,
anybody doing the relationship sales. We
hmm,
did a lot of the marketing stuff, and so like
hmm,
having a comprehensive approach is okay.
hmm,
But
Mhm.
the way I we got over it was we started measuring the activity, and including
hmm,
ours, to getting to real actual numbers on the close rates,
Mhm.
so we could have
hmm,
comparable. But I would just
Yeah.
warn you, like you're a little bit naive if you think your close rate is 75% or your activity is way too low.
Yeah.
okay. Hmm,
Well, I think that's to your point, Matthew, on what the real numbers are. Like, if if you get to the point in your firm where you're actually thinking about developing a sales organization, I mean, that sounds very formalized. I think for some firms, they don't think that they can accomplish that, but what they need is a sales process to get started. So
Hmm.
it's in order to have some way of tracking what the activity is. I know like there's a lot of different tools out there, like some firms use HubSpot or Salesforce, or you can even just start with your Excel spreadsheet if you want, but something to keep track of those leads coming in, who's working the leads, and then, as you said, there could be a tag team approach. It could be on this type of client, we do have the firm leaders do like the first meeting, and then like they have somebody else in the firm in it with them, and then they pass them off. So there's a lot of different ways to do that. I'd be interested to know, like Matthew, from like where you started with your building your sales organization to like when you felt like you really had it down. Like, did you start with a process like that, and what kind of tools were you using?
Yeah, we went with a CRM system. We actually did not start with a process. We started by hiring a $50,000 salesperson that
Mm,
had 50K of upside so they could make six figures if they closed everything. And
okay.
um, and then and then it took about 18 months or 2 years to like figure out what that looked like. But what they did was create a sales process. What we found was the accountants wouldn't use the sales process. Like you have to pay people to run the sales process, and if you're paying somebody
Mhm,
50 or 100K, like it pays back pretty quick on the time you get back as a firm owner
mhm,
from a highest and best use perspective, or we found that. We were complete skeptics, just so you know. Like when we started, so what we did, so we were Atlanta based at the time, and we had, like I said, we had about probably when we started trying to do sales, we were probably about 20, 25 people, and only two of us really sold. And so what we did when we hired the sales team, they weren't allowed to call Atlanta. They were
mm,
they were like completely figure out if outbound will work. Like this is just cold call, like go do that. Maybe get some marketing out there. Like we were able to layer on more sophisticated marketing as we went. We
mhm,
did have we hired a firm to help us supplement marketing, and then I think about 4 years ago we brought that in-house. So that was 8 years of getting outside marketing support, but then bringing the
mm,
sales support in-house straight out of the gate, at least from a closer perspective. And then we separated the roles about 18 months in between appointment setters and closers because the
Oh,
different
okay.
people would warm up the
Hmm.
leads. And then
Hmm.
you're trying to get it to where, one person, and we still only have, we got to about 11, 12 million in revenue before the Soren transaction in January. And that was with two closers and nobody doing
Okay.
relationship sale.
right.
So we were able to
Okay.
scale pretty good um,
Hmm.
with
Hmm.
that team.
Hmm.
So they contribute somewhere between 1.5 million and 2.5 million of net new revenue a year right now for our team,
Hmm.
I guess
just
And
between
going
the
back.
two of them.
yeah.
Mhm,
And how do you standardize the process, So how do you go away from just two rainmakers and kind of you know, build a platform on which people can play?
Yeah, well, I mean, when we got started, we hired somebody that was a sales trainer to oversee the
Hmm.
department. So she really
Hmm.
just like accelerated because we're a bunch of Yahoo accountants don't know what they're doing. And
Hmm.
we did two things. We hired a sales trainer and she got us started. And then the second thing we did was we modeled after software companies, not accounting firms, because
Hmm.
we didn't find any good examples of
Hmm.
mhm,
transactional outbound and inbound marketing with
Hmm.
accounting firms. It's just hard to
Hmm.
find people that do it well in this system. And I think we get in echo chambers as accountants, and like, what is everybody else doing? And
Hmm.
like, it's really refreshing to look to other industries and really see
Hmm.
who's doing it the best. And when you look at SaaS companies, 80% margin, CAC, that's kind of crazy, numbers that you're looking at the lifetime value of their opportunities. Like we modeled that and then we built our metrics like a SaaS company would build their metrics.
Hmm.
mhm.
Interesting. Yeah.
And you were in the SaaS kind of niche as well, where you
Yeah, and
don't.
I was in the SaaS niche. So like in our co-working space, we were lucky and I mean we had some unicorns come up. So two unicorns were our neighbors, one called Sales Loft and one called Calendly. And so like we
Mm-hmm.
would in their infancy, like we had them as resources on how they were thinking about the world, how they were building their sales teams, and we were trying to copy them on how
Mm,
they were doing. And you're talking about two startups at the time that turned out to be billion-dollar organizations or multi-billion
Mm-hmm.
dollar organizations and
mm,
unicorns. So there's a little bit of good fortune there, right? Like if I had like a great resources outside of the industry that I had access to that was like before their prime that
right.
Mm-hmm.
helped us do this, right?
But
Mm,
I think that's an important, very overlooked point. I've got a client right now who's in like the tech space, like as an accountant who wants to like serve that sector. And so the strategy is to, go to some of the events where these, potential software company clients can be, but you're being immersed not only in like their like what they need from an accounting perspective, but how other businesses are like running. Because, for accounting firms, I think the secret sauce to unlock pretty much like any market is to show that you understand the business and you can provide the strategies and make them think differently about the business, right? Because a lot of these,
mm,
especially like small to mid-sized business owners have never like gone to school to be like, fractional CFOs and all of that. So you can bring such a layer of magic wherever you go, but you need to be able to verbalize that. So it's one thing to get the opportunity to potentially work with these, but that's where the messaging comes in is, I've worked a lot with accounting firms who want to go and do like even just simple networking at events, but when they're like face to face with like their ideal clients, they have no idea like how to even like start the conversation. And so I think that's where the sales training can be really beneficial. And
Right.
then, I mean, you can perfect your message with those small groups and then take it to the bigger stage. So I always
mm,
say, start with getting into where your, potential customers are, learning how to talk to them about their pain points, then expand it to like a bigger stage. And we're talking more like in person if you were going to go and speak at a conference or do a webinar or something like that. But all of that sales training can then translate into other marketing, whether you're going to do like outbound sales calls or you're going to do Google ads. It's like once you lock down what your messaging is for a certain market, you can spread the word where your ideal clients are. So I
mm,
know
mm,
I remember actually being, I think it was at Bridging the Gap, Matthew, where you were on a panel talking about your approach with outbound calling. And I could you talk a little bit about that here? Because I think that's a unique approach that a lot of firms don't tap into, or they don't tap into it very well.
mm,
Yeah, I mean, well, it's a daunting volume play. Like we're looking
Hmm.
at like conversion rates on the outbound side. We're targeting a 0.3% success rate. So if you
Hmm.
imagine how many phone calls, that's like 300 calls to get a client, right? So so what we do and how the team is set up, well, first we have the inbound team. So we have the marketing team that's helping put out content for each of our ICPs or our ideal client profiles. So you say, I want to work with, and I'll give you some examples of ours. I want to work with a 10-person SaaS startup before they have hired their first accountant. So now people know what to look for right on LinkedIn.
mm, mm,
In e-commerce, we go a little bit upmarket from that. So we want to go with a 20-person e-commerce team. So we're targeting because we use people as a proxy for revenue. So we're trying to get them somewhere between 2 and 5 million in revenue. And we want to make sure that they have certain pain points around sales tax, Nexus, and things of that nature. So those are two primary ICPs. And I just give you those
mm,
examples to set this up.
Hmm.
So marketing then starts content towards those people. Like Like, how do we drive content for those people? Then
Mhm.
we have our outbound team, and what they do is because our target market is so low down market, we don't really have lists we can buy, like some other traditional things. Like if you're
Mm.
targeting bigger clients, you could probably buy lists. So instead, what we do is we use LinkedIn and a couple other like tools to identify the buyer in that case, and then we run what we call a 5 by 8. So we try to do, or we used to run a 5 by 8. I don't actually know what we're running right now, but you run. The concept is the first number is how many touches you're asking your team to make, and the other is how many business days you're asking them to do that in. So a five
Mhm.
by eight is like it's an email, then a phone call, then an email, phone call, email, and then that's over an 8 business day period. So if you're asking them to do 30 of those a day, they're doing the day one calls on one, or the day one emails on one, then they're doing the day two calls, the day three emails. So it kind of
Mhm.
cascades for anybody that likes
Mm.
to do a spreadsheet. That's how you figure out like the volume that a single
Mhm.
person can handle. And it
Mm.
is truly a volume play. But like as accountants, I'm just shocked that we don't like this more because it's like math.
Mm.
Yes, I
Uh,
know. It's the math of marketing.
uh, yeah, it's like math. It's like if you make 1,000 of these, you get 3 clients. Like if you do it a
Yeah.
thousand times, you get 3 clients. But you have to have a system and you have to follow it through. So then those people hand it off to a closer in our organization. So there's 3 kinds of people. There's the marketers, there's the appointment setters, and then there's the closers. And then the way that the closers use the CPAs in our organization is anything kind of say anybody kind of over 2.5 million in revenue or anything that's going to kind of get into the say just anything over $2,000 a month or more in fees on a recurring basis, what they usually do is they extend the sales process from like a single call close to a second call close where they bring a subject matter expert in. So now they've set the stage. Now
Mhm.
they demonstrate deeper understanding because the sales guys know some of our industries, but like if you get our people talking about like our e-commerce people, if you get them on the phone, they're talking about how Amazon works with Shopify, works with
Yeah.
A2X, works with Zero, which is like, and then they're talking about all this crap with Avalara and sales tax, and they start talking the language and they geek out. But you still need that salesperson to drive that to close, right? Same thing that happens with our crypto practice, our SaaS practice.
Mhm.
Our salespeople know on the larger deals, like they're going to get more closes if they extend and do more meetings. Like they get
Yes.
it's kind of crazy. So they have to adjust and adapt to like reading the room. Like, does this person need more proof points? Again, this didn't come through a traditional client referral typically, right?
Mm.
Those are totally different sales calls, right? Those are like, I don't need anybody, or if I'm gonna do
Yeah.
that, I'm gonna go get the person that's on that client that they referred it to like talk to them. So that's how the process kind of modifies, and we use the kind of that 2K a month, so 25K ARPU or 25K annual revenue like threshold as like the determiner of like when to bring in an accountant or when
Mm.
to scope
Yeah.
things. But we also
Mm.
have products set for that person that they understand, um,
Mm.
at least for our simplest services that are like transaction. You can get like quotes to from number of bills, number of invoices, number of
Mm.
transactions, number of bank accounts, credit cards, and stuff like that.
Mm. And
And
how do you
that's
decide on when you want to bring a subject matter expertise, or you just go for closure, or so that it's a
Like that's
sales?
the closer,
Mm.
like they're incented to close the deal. So
Mm.
they know that they're missing
Yeah.
the mark. And they
Mm.
instead of like trying to make some stuff up, they're
Mm.
like, hey, what if I like it seems like you're uncomfortable, like it seems
Mm.
like you need more information. What if I got one
Mm.
of our CPAs on the phone and we
Mm.
would talk to you and like really make sure that we're exactly getting this exactly what you want, right? So
Mm.
they'll just make that transition, they'll get that person on the
Sure.
call. And
Mm.
then the big thing from our service, like our services team, is making sure they give capacity to that person to do
Mm.
that, right? Because then you
Mm.
start getting into
Mm.
like
Mm.
comp and stuff like that. Like you've got to create this
Mm.
culture, like where that sales team provides so much work for everybody that everybody's willing to do that for them. Like, so
Mm.
it's like a non-traditional, but that doesn't
Mm.
go on
Mhm.
somebody's scorecard that they went to a phone call, right? But
Mm. Mm.
I know the people that do it the most
Mm.
in my org, like because the salespeople will tell me like these 3 people, like when they get on the calls, like they like we get it closed, you know.
Mm.
Mhm.
Mm. And what are
And
other practices, Matthew, that you follow? So
mhm.
I'm sure that. lead is all about the math, right? It's basically outreach. It's a function of an outreach. But then how do you make sure that you don't have a leaky bucket and then leads is getting into SQL and then getting into closures?
I don't know. We're talking about top line here. We're not talking about retention here. Uh, the first thing that happens in our organization is if sales brings in a shitty company, we have a separate onboarding team. They have a
Hmm.
great relationship with that onboarding team, and that onboarding team tells them, you brought in a shitty company. Like we had to completely rescope it. Like this is a no-go, this is a no-go, this is a no-go. Like these are things because we can't like I have 250 people now in the organization just in the accounting services team, and we still can't do everything. We
Hmm.
still like desktops hard. Like
Hmm.
Hmm.
we got one for Dell Tech. Like we get another system. Like we're like some like they just got to know that that stuff is hard. And
Hmm.
then we've
Yeah.
got to kind of stay in our lane a bit from that perspective. Um, I can do more now, but it's still we still have limitations, and you have to acknowledge those limitations, whether technology, whether it's people that want to be on site, whether people only want US based people. Like there's a bunch of objectives we've figured out how to manage over the years, and you just have to be okay saying no, you know?
Hmm.
Hmm.
So that's kind of
Hmm.
an interesting segue into like the standardization of what you're selling too, because
Hmm.
you
Hmm.
know what you were just describing, Matthew, is it seemed to me like in some ways a customized approach within certain guardrails of
Hmm.
you know, these are the sorts of packages that we have. The sales team knows, you know, these are the basics. But these higher end clients, you know, of course, you're going to probably like customize it. They get, you know, more meetings and things like that. So how is a fine line like between having, because, you know, for some firms, they sort of want the cookie cutter and it's like here's you know we do payroll and to your point about like this is how many payrolls it entails and this is the price point and you can pick from one of three and we don't like have any coloring outside of the lines and that's a different type of client than you know these advisory relationships with larger companies where you're going to like you know, bend over backwards because like they're willing to pay for you to, you know, do some accounting yoga, right? So,
Yeah.
you know, I think that's an important point to crystallize for the firm too, like what they actually want to be servicing, because it's no fun to be working 100+ hours a week on stuff that you don't like, and you shouldn't be selling that either, right? So like that's where I guess like knowing what beyond the referral, like knowing what exactly you want is going to inform what you do. So like your outbound calling, like when you were putting that in place and you said, you know, we didn't have lists per se that we could get, where were you getting the people to call from?
So the appointment setters are the ones that develop the lists. So they develop the list
Okay.
and make the calls, and that, like that's part of their role
Okay.
from for the organization. So
Would they
that's
be
how.
like scraping it from like LinkedIn and things like that
Yeah,
or
we used a tool called Apollo for a long time. We
oh
used
okay.
LinkedIn Sales Navigator for a long time.
Hmm.
Like our head of sales is great. He's adapting always to the new technologies and the new ways
Yeah.
to develop lists.
Hmm.
And then like email deliverability is unreal when you're sending this many emails. I'm
Yeah.
like how much you have to modify the subject line and like
Yeah.
modify the ask, like changing the tone between emails, between a give and an ask,
Mhm.
like giving value and instead of asking for value. And that's we're talking about the emails even before we get to the marketing drip after that. You know what I mean? Because these are people sending emails initially.
Hmm. Hmm.
But when you talk about guardrails, I think that's a good way to talk about how we think about the world is like, so when I talk about guardrails with our teams, one of the challenges that a lot of firm owners had, in my perspective, is they have this idea that there's a single way to serve clients. And I think that's fine.
Yeah.
But I would caveat and then say that there's three clear stages that we see in our practice. And so within the verticalization that you talk about, like within a SaaS. So let's just take the technology SaaS founder because this is
Mm,
an easy way to think about it. So they are in one of three buckets, even within SaaS vertical to us. And different teams serve these three buckets, to be clear. But the first one is like this basic one. This is like a SaaS founder that is just getting started and he's really making decisions based on his bank balance. So we put
mm,
him on a cash basis offering that's like transactionally priced, number of bills, number of credit cards, like all that kind of stuff. But we try to educate him and by sending him a balance sheet income statement every month. The most sophisticated one has external investors. So they have to get an audit. They're like in the gap world. And then 70% of the clients we have are in the middle. I call them modified cash basis. This is like the worst thing ever because it could be anything. But we create
mm,
space because the entrepreneurs are on this journey. Like they're going from running their business based on their bank balance to kind of trying to make business decisions based on their financials to like really trying to get predictive with sophisticated KPIs. So
mm.
in the
mhm,
SaaS world, that's like somebody that has their CAC, their LTV nailed. They're nailed
Yeah,
enough to where they can raise money and that kind of stuff versus somebody that understands, how to make business
yeah.
decisions.
mhm,
And I think a lot of us are getting pressure from all of the intuits of the world and people like that saying go up to advisory, which is that stage three, or maybe that
mhm,
stage two plus. And we've just not, for our firm, we do all three. So, but we have different teams that specialize in them
mhm,
because the people in stage three can't get out of their heads that that service level to do cash basis is okay. So you
mm,
have to make some decisions as a firm owner as what's going to be okay to you. And a lot of the firm owners I know are like, when they hear about my stage one, they're like, think I'm the devil. And I think that that's like sacrilegious to allow people to stay on cash basis accounting. And my thought is, like, I understand what they're saying. I understand that we want to get people educated, but
mhm,
these people, you have to meet them where they are. So we provide the service for where they are, and then hopefully they grow with us.
Mm,
mhm. And that's a great way also to grow your practice, right? I mean, you can think about like what stage certain companies are at, and even, you don't have to serve all stages of a company. You can just have a sweet spot as well.
It's
And
difficult.
then,
It's difficult as a small firm to serve all the
yeah.
stages. So
Mm,
Acuity was really stage one, stage two, and not really the
mm,
mhm,
really sophisticated gap. We would lose them on the top end to the bigger
sure.
firms. So
Mm,
doing this
mhm,
partnership with Soren, we have more people doing that more sophisticated stuff. That's really
mhm.
interesting.
mm.
So
So
from
this
the
niche, what is the role of niche and messaging, in terms of reaching the right audience?
so what type of messaging?
I mean, so when you have arrived at a niche, as Matthew said, so they were good with
Oh,
Series A and Series B, right? So
mhm,
those are the kind. So what is the role of messaging? How do you look at branding lenses,
mhm.
to convey who you are and, how you serve these companies better?
Well, I think going back sort of almost to the beginning of our conversation where Matt was talking about the separation between like the firm owner and then the brand. Like that's like decision point number one because
Hmm.
I still see a lot of like, smaller firms just getting started, and they struggle with that because they sort of are the face of the firm. And then, I'm always a proponent of as much as you can to separate yourself
Hmm.
because
Hmm.
if you want a business of longevity, it can't just be you.
Hmm.
And not to say that you can't have your stamp on it, that you can't be shown to be the CEO of it and everything like that. I think that's great. But from like actually reaching the target audience with like messaging, you have to be able to speak succinctly to what their pain point is. And one of my, I guess, isms in the market ownership method, I talk about wheezing. And I see it all the time. I always say I could rewrite everybody's website for years, just taking the we do this, we do that, talking from like the perspective of the firm rather than
Hmm.
the perspective of the client. And
Hmm.
even just making that flip in the way that you think about your firm and the way you think about serving is going to flip the messaging too. Because if you can't convey to somebody the value that you bring to them, then like it doesn't really matter what you try to do in terms of referrals or no
Yeah.
referrals.
Mm,
And I've
mm,
worked a lot with firms on that, even like that networking spiel that I was talking about. If you go and say, "Hey, I'm a CPA and we do fractional CFO services," and that people have no idea what fractional CFO services really are. You've got to
mm,
be able to say, you
mm,
know, wow, like in businesses like yours, this is what we're seeing. And,
mm,
our clients in this sector are experiencing X, Y, and Z, and this is how we solve that problem for them. Or
mm,
we see it as
mm,
a real challenge. Is that what you're seeing too? So that
mm,
you can show them that you understand who they are, what they're dealing with, and then how you can solve the problem.
mm,
Because at the end of the day, you're not an accountant. You're somebody who's
mm,
solving the
mm,
problem of giving people clarity with their
mm, mm,
financials and what's going on in their business.
mm,
So
mm.
then taking sort of that whole base layer of messaging and weaving in what's specific to the niche that you're serving is where
Right.
you're going to get like the real power messaging from.
Yeah. Mm.
Yeah. And I would
And
add to that. I
mm,
would add to that
mm,
because one of the things everybody's always worried about is the more they niche, the more they like limit their opportunities.
Mm-hmm.
mm,
But you're like spot on the value side. But what I've found is the more specific I've gotten, the more reach that gets. And then outside of that niche, all some of our other niches developed because people will literally come up to me when I was still doing the relationship sales and say, I know you're the tech guy, but I need help. Like what?
Right.
And then I would find somebody on my team. And the nice thing for me, from a freedom perspective, is they knew that I wasn't going to be their guy, but I would have somebody on my team do it. So they like were disconnecting that challenge
yeah.
that owners have
Mm,
of like
Yeah.
people always calling you and then having that limitation on growth and like they always
mm,
call you is the more you niche to be like, oh yeah, you're known as the tech guy. We did have hospital people, and they would be like, "Hey, I've got the hospital would come to me and like, I don't know who the hospital person is, but I know you're the tech guy." So, and then you actually create more credibility because
Yeah.
what's the odds, like when you go to the first person, that
mm,
that you're going to be the guy, right?
mm,
That is the best in that space, and you're like, I'm not the best person in that space. It's the first
mm,
thing they hear from me, but I
mm,
have so and so that is. Now
mm.
I've like been like almost vulnerable, like to
Right.
create, and it creates this, and this was not a plan, but it creates this trust when you're
Yeah.
like, I can be everything, like I can
Yeah.
do everything. No, I'm
Mm,
not the guy. Why don't I put you with here? This person will
mm,
be able to tell you exactly what that is
mm,
Yeah.
in this thing. And if that person's at your firm, that's great. And one of the things we did early was try to figure out what everybody was interested in, who wasn't a good business
Mhm.
developer. And
sure.
then
Okay.
so that when that came up, like that's how we grew other verticals was like through people's interest level, not through just like spray and pray, right?
Mm,
Yeah.
mm,
Yeah, and that's like a great place to start figuring out where your niches are too. It's not just like what you like to serve, it's what people on your team do. And
mm,
I know Randy Crabtree and John Garrett, they talk a lot about like your finding your and knowing the and of people on your team.
mm,
I would also
mm,
say knowing the and of your clients can also lead to
mm,
opportunities too, because there's adjacent industries in just about every vertical. So you think about accounting, there's often legal or banking or software, things like that that are adjacent. In the medical field, there's all kinds of like different specialties and like adjacent industries. So you can often sidestep once you build like a vertical in one into something that's closely related that becomes very easy for you to serve and own. And I know we've talked a lot about like sales process and finding your niche. One thing, I don't know whether you had done this as you like scaled Acuity, Matthew, but like digital ads and things like that, because that's something that I find like firms often think that sales and marketing is like a quick step, and it's really like a very long journey process when you're selling, depending on the level of B2B services, but it's a longer sales cycle than a consumer good. So did you ever do any kinds of like digital ads? Because I've seen like mixed results with those too for firms.
Yeah, we have
Yeah,
we've
in
we've
fact, this
ex
is a good point. And, I want you to, Matthew, bring in what are the all other components beyond referrals, when you look at.
Mhm.
So for any growing firm,
Yeah.
how they should look at,
what are
Mhm.
all the things you should look at? Everything.
All the
No,
things,
I
there's a
mean,
lot of them for sure.
uh,
I
so
mean, at least 4 or 5 things which a firm
Mhm.
owner can try, when they are
Yeah.
trying to go beyond referrals,
well,
right?
I mean,
So,
I always joke that marketing is what I call eating my vegetables, is because I know it's good for me, but I don't know exactly why, so I just do it. So what we've done with the marketing side, so content is really crucial for both
mm,
SEO and now whatever we're going to call the GPT search
mm,
algorithms, right? So
mm,
Mhm.
content, like this is just a content muscle that you have to build. So um, I think one of the things digital marketing starts with having the content, right? Because you got to point back to somewhere where people don't bounce off the web page and go through there. So one of the first things we did was we like blogged and we had original thought.
Mhm.
So and you can do that in a number of ways. You can get marketing or somebody smart to say these are the things people are searching for. These are the things your ideal client pro
Mhm.
like and what I do is like I sucked at writing. So they would say, here's the 3 prompts. And I would do a 5-minute video where I just like literally a Zoom where I just
Mhm.
like talked about it and then they took that. And this is not my shorts and stuff like that. This is just like blah, like as much as I could about it. And that could become one blog that sometime became 3 blogs, that 4 blogs.
Mhm.
Like I got it in the hand of a marketer to do that. And then which blogs took off like determined what we did for digital marketing, where we started paying
Mhm.
for ads, where we started
mm,
doing stuff like that. But having the sales team that would follow up on the form fills and stuff like that
Yeah.
was important because it all kind of comes together, right? So if somebody fills out a form on your website, like the stats are crazy. Like my team is trying to respond within 15 minutes is the goal. So like the but
Yeah.
like if you ask an accountant to do that, they're like during tax season, you're gonna be like get glazed over eyes and like there were leads at some places that weren't getting responded to for 2 weeks at some of the firms that we're joining up with. So during like peak times, but our sales team was
Mhm.
like, let us step in. And now we respond between like we're trying to get it under 30 minutes. The goal is to get it to
Mhm.
15-minute response time because what typically happens with inbound leads is like they're in the buying mechanism, like they want to talk to somebody now. Like
yeah,
they want to get on the phone.
yes.
So, so when you're thinking about digital marketing and you're thinking about that, and I don't want it to be daunting for people, but like having
Mhm.
somebody on your team that's accountability is working, like even if it's not a full-time accountability, is responding to people, setting appointments, doing that. Like it doesn't have to be a
Mm,
professional salesperson, but somebody who does have accountability to be responsive. They're going to spend all
mm,
this time marketing.
Mhm.
mm,
So,
Yeah.
mm,
So if I can think or get people to think about creating like a loop, so it's a lot easier to kind of put a lasso around, a few things that you can do for marketing and sales development, as opposed to there's everything under the sun and we're just gonna like pick a few and see if they work. So the building blocks, like the basics to me, are you want to be able at the end of the day to have some kind of CRM and a list of prospects that you can keep reaching out to, because that 5x8 is a good like tool. You have to reach people, the like 8 times like throughout the journey. So if you think about like your own experience buying things, first, you're probably going to do some online research, and now we've got the, AI driven search as well. So think about what questions are people asking about what you provide, and the best place frankly, to find those questions are to think back on your client conversations and prospect conversations of the past. So, what are the things that people are always asking you? And then thinking about what kind of content could I have on my website that would answer those questions.
Mm,
So, some kind of
mm,
FAQ, something that they can download after they fill out a form, even though, it seems like very basic. A lot of firms still don't have those things. So
mm,
drive people to your web page, whether you do that through digital ads, through networking. You can have like the QR code on a digital business card or your LinkedIn profile. And then from there, you have those leads that start coming into a database that you can then email out. You can get more information on, find them on LinkedIn and like make some calls. So like that's a very like rudimentary sales flow that you can start
mm,
with.
mm,
But I would also like to Matthew's point earlier, like you have to put the time in because I coach firm owners and a lot of times it's like, okay, every day you really do need to be reaching out to at least 10 people,
mm,
Yeah.
and they're kind of like, these are some of them are smaller firms where they have an admin or, somebody doing that. And it's almost like there's a resistance to doing that. Whereas if you had a tax return in front of you and, you're going to get paid to do that, they're very willing to do it. But once you see that by taking this business development process seriously, the money does start coming in, you'll want to do more of it. And so sometimes getting out of our own way is the number one job.
Yeah, and I
and
think consistency
mm,
is like the theme key
Mm,
for like
yeah.
relationship sales, for outbound marketing, outbound sales, inbound marketing if you're doing
Hmm.
demand gen. And like the example, like my only advice is like don't get overwhelmed with it. Like figure
Hmm.
out how to get accountability partners. When I started doing blogs, that was the first thing we did. My wife, who's also was a professor at the time, she's associate dean now, but she had to publish all the time. So she had to write too, and I had to write. So we would go to breakfast once a week, and we would spend that 2 hours like creating content. So like she was doing that like in a more professional way than me, but like I guess I'm professional too, but I like wrote. And like that's how like accountability partners set me up from that
Hmm.
perspective. And then when we got into video, my business partner, we created a podcast and we just like, oh, let's do a happy hour so we can get on YouTube because we knew YouTube was going to be a big search. And we were like, what can we do every week? And we were like, well, we could do a happy hour conversation. And then that got us comfortable with video. So then we had the blog content, we then had the video
Yeah.
content, and these things start stacking, right?
Yeah.
As you build. The big thing is like the more intentional you are, or the figure out, or if you can figure out how to get intentional as fast as possible,
Hmm.
that helps. And then making sure it's sustainable. Because like I do shorts every week now, but
mm,
Hmm.
I can't do shorts every week. I travel most weeks. So
mm,
I
Yeah.
record all of my shorts once a month.
Yeah,
And we
you
do
batch
somewhere
them.
between 4 and 8 shorts. Now I have to change shirts. We figured that out the first time because they're like, my wife was like, "You're in the same shirt and all of your things." And I'm like, "Okay." So I have a stockpile of t-shirts now that I change
Hmm.
in, and so my marketing person helps me. Like she's like, she thinks I'm a dork, but we record all of those, and that works for me. The guy that took over our e-commerce from Patty Sharf, who had done our great, she's the one that built our 10,000 subscriber e-commerce YouTube channel. Um, she had found that her comfort zone was at a 5 to 12 minute video, and
Hmm.
she liked doing it every week. And he's kind of more her style. And it's like very educational, very rich, very much
Hmm.
trusting. But then, so I thought theirs was cool. So we were trying to do more stuff on the tech side that was longer form. And they thought the shorts were cool. So then they started clipping some of the stuff. So we started
Hmm.
like ham and egging a little bit as everybody started getting into the habit and saw other people like doing
Hmm.
things that made sense. Like it just stacks and piles, and you create this culture where people want to be involved. And I think that's where you get the big wins.
And then
mm,
on the flip side of all of that is because nobody wants to spend their life, at work or even if it's marketing and it's fun at work, is look to see what's working and what's not on the analytics side. So, Google is rich in analytics. You can see what content is resonating. You can see where you're getting clients in like online, and do more of what works and don't do the things that don't work. And that's, I mean, it sounds like common sense, but you know, I would say, especially like on digital marketing, you probably need to give it a good 6 months before you really like will
Okay.
see any traction.
Hmm.
But if you find like there's content that has even if it's gotten like 50 views as opposed to like no views, I mean, you kind of know like that you're down the right path. But there's a there's an art and a science to it, but I don't think it has to be overwhelming. It's really about focusing in on who you want to serve, knowing what their pain is, and then finding out the best places to share your solution to that pain.
And with that, we come to the last question, but a tough one. Okay.
Okay.
What's the marketing budget that one should allocate?
Mm.
What's the marketing budget?
Yeah.
Well,
Um,
I think
we
it can come down to marketing by objective, or marketing by project, and y- I think you can do a lot on very little to get started
So
with.
let's say how much a 3 million firm should spend, how much a 5 million firm should spend, how much a 10
Mhm.
million firm should spend, right? So
Yeah,
seven and a half
just give
percent,
about that.
yeah.
Okay.
seven and a
Usually
half
it's
percent, but you got to count your time.
Hmm.
So
yeah,
my goal is to get it up to 8%.
Hmm.
So if
yeah.
I was
Usually,
spending, go ahead.
Hmm.
no, you go ahead.
No, so we were trying to get it to when we were at 2 million, we were trying to get 160K invested
Hmm.
in it. And if you
Hmm.
count your own time, if I was spending a quarter
Hmm.
of my time, then you had to prorate
Hmm.
that like
Hmm.
as you think of
Mm,
that, or else people are like,
Hmm.
that doesn't make sense.
Hmm.
So you have to count your time as an owner plus the time, but like that 7.5% is still kind of what we go to
Hmm.
right now for team salaries, like.
Hmm.
And you can spend more on digital marketing. It's like that's the kind of like the
Hmm.
black hole. So you gotta,
Hmm.
but then
Hmm.
that's the easiest one to measure too, because you
Hmm.
can track it
Hmm.
all the way through. So
And this 7.5% for the targeted revenues for the next year. So,
that's what I told him. That's what we did at Acuity. It's like Tyler has 7.5% of the budget. Whatever top
okay.
line is, that's that.
Hmm. Hmm.
And well, I mean, if it grows, like you keep wanting that to grow up, you don't want them to get less.
Yeah.
right.
Hmm.
Yeah. Yeah, and I would agree with that. I mean, usually I mean, you can go up to like 10% if you're really aggressive and trying to in a competitive market, but between 5 and 10%. It, and
Hmm.
what I would say too is that you can, stepwise it, start with something lower, and then as you see results, increase it, right?
Hmm.
But
Yeah, I would
a
argue
good rule
that's
of
usually
thumb.
your time. If you don't want to spend cash, like you're spending
Yes.
your time, but like you got to value your time too.
Yeah,
Hmm.
100%.
Thank you, folks. I think the time just flew, right? I mean, it's
It
already 60
did.
minutes. I
Yeah.
don't even feel like we just got started.
Yeah.
But, thank you for joining. And I think we covered a wide area of things, majorly, a good part was, how do you set up a sales system? How do you look at
Yeah.
messaging? How do you look at niche? How do you look at, content creation? And finally coming to budget. So I think it was good to know the 360 degree of sales and marketing. And I think as a follow up to all our viewers, we will put up some plan of how do we build this first 90-day starter pack beyond referrals. How do you get started? So, and I
Mhm.
think to all the people who have joined the participants, we will create a short kind of a white paper on how do you get started out of the content we you guys shared today, and then we'll circulate with everybody. So
Yeah.
thank you for your valuable
Thank
time.
you.
Thank you, Matthew. Thank you, Gaynor, for
Yeah. Thank you.
this session. It was lovely to have you all. Thank you.
Yeah,
Thanks very
for
much.
sure. All right.
Yeah.
Thank you.
Bye bye.
Okay.
Take care,
Bye-bye.
everybody.